Buying multifamily real estate can change your life drastically, but one wrong move can cost you hundreds of thousands of dollars. In this video, I am breaking down the red flags I always look for before buying any apartment building so you can avoid rookie mistakes and protect your money. Welcome back to the channel, everyone. My name is Shade and this is Ellison Capital TV. I invest in multifamilies across Canada and the US, and I help professionals like yourself learn about wealth building through real estate investing. So today we're going to talk a little bit about the red flags that I saw in the market, and I want you to avoid that as well. If you have any questions about any of the red flags, you can contact me below. I'll put it here or here. I think I'll put it here. It looks a little bit neater here. And feel free to reach out to me. We can book a one-on-one call. I can talk to you a little bit more about it. Without any further ado, let's go right in the video. Red flag numero uno: deferred maintenance that's hiding a bigger problem. Old roof, plumbing, HVAC, those major money pits. You want to make sure as an investor you know exactly what you're going into. No, I'm not saying if the roof needs changing or the windows need changing that you shouldn't buy the property. What I'm saying is that you should already know beforehand that, okay, in 5 years I need to replace the roof. In 3 years the windows need changing, so that you either raise the capital for that fund, for that expense, or if the building is cash flowing enough, if the building is cash flowing enough to cover those costs, then you may opt to use the cash flow, or maybe you have funds already to do that. So you just want to make sure that you're cognizant of every single expense, especially these major expenses, because roof, HVAC, plumbing, boiler, like those are not cheap. It can run you anywhere from 50 to 100,000 depending on how big the building is. So we want to make sure that we have that under lock. Now, how to spot we're still on red flag number one, and how to spot lipstick on a pig renovations. I always say get a physical inspection. So first I do my walkthrough. I look at every single unit, and you can kind of tell if you do enough walkthroughs, you'll kind of tell, okay, there's water damage here, the windows are old. You'll just pick up on certain things, but do not be deceived. You always need an inspection. So roof inspection, HVAC inspection, the whole 9 yards, because you want to make sure that you have that knowledge of, okay, what am I getting into? So I will always tell people, get a physical inspection and walk every single unit, not just the unit that the realtor or the seller assigned you on the initial walkthrough. Just make sure that, okay, after the initial walkthrough, you'll be able to at least see every single unit and the common area, so you know what you're getting into. Because some renovations can say that, oh, it's a full renovation, when it's not. It's actually just lipstick on a pig, meaning that they maybe just paint over some stuff. They haven't even changed the appliances, those kind of things. So you want to look into that. Now, what you want to see. You want to see clear capital expenditures logged. You want to make sure that everything is accounted for. Like what were the expenses in the last 3, 5, 10 years? When did you said the windows were changed, so what proof do you have? You can never take sellers at their word. You would be doing yourself a disservice because you need to do your due diligence. Red flag number 2, inaccurate financials. So rent roll doesn't always match the leases. So you want to make sure that you double check every single thing that the seller or the seller's realtor sends to you to make sure it is on point and accurate. You have to look out for inflated numbers, underestimated expenses, missing line items. I would encourage you to ask for 12 to 24 months off. So we always ask for 12 to 24 months of trailing financials and bank statements. That way we have an idea of how the business, because I always call it a business, it is a business, you have income and expenses. We want to see how that business works. So us at Ellison Capital, we make sure that we look at every expense items. We ask for 12 to 24 months of financials and bank statements to make sure everything is up to par. Red flag number 3, a bad location dressed up as a potential. A beautiful building in a rough area is problems. You don't want the headache. The tenant profile isn't always the best as well. There's going to be a lot of turnovers. So we do not invest in those areas. We look at the tenant profile, the crime rates, the school zones, economic trends, what happened in the past 5, 10, 20 years, the projected or how promising the area looks, because some areas, even though they're not as bad right now, they are being developed probably by the government, the city, whatever it is, then it may have some potential. But you always want to look into those key areas, hone in on those. What is the tenant profile, the crime rates, the school zones, and the economic trends. So what we always do here is we visit at different times of the day and talk to local property managers, local realtors, or even tenants in that area to say, hey, what's the deal here? Do you like living here? How long have you been living here? What problems have you had in the last 2 years? Just to, keep it conversational and just to uncover a lot of things that maybe the person that's selling the property to you won't want to tell you. So if you have any questions about any of these tips, again, I will leave my contact here. You can send me an email, or we can book a one-on-one to talk more if you're interested about learning what we do here at Ellison Capital. Red flag numero 4. I need to brush up on my Spanish. Okay, so red flag numero 4. Okay, you know what? I don't speak Spanish, sorry. If the seller and broker avoids certain questions or they're being hesitant. So if you ever have an experience where the seller won't answer basic questions or delay documents, there's probably something that they're hiding there. If it's a property that you're really interested in, then I would definitely encourage you to make sure that you do those due diligence and you do it very thoroughly. Just take what they tell you with a grain of salt. Yeah, take it with a grain of salt and make sure that you go through everything line by line, because there's a reason for that delay. Always a reason for that delay. Transparency is a green flag. Deflection is not. If it is that of a good deal, they should be eager to show it off to people who are interested. So always be mindful of that. And yeah. Red flag number 5, high turnover or vacancy rate more than 10 to 15%. So if it is in a major city like Edmonton, Calgary, I don't know much about Toronto, but I would suspect Toronto, primary markets, Saskatoon, Regina, Ottawa, you should be very mindful of high vacancy rate. You should be very mindful of high vacancy rate in primary markets, because in primary markets, there are, the population is a lot more. There's a lot of development there. So usually the vacancy rate are not as high unless we're in an economic slump or maybe a recession or mass migration. So if the vacancy could signal bad tenant screening or poor management. So you just want to be very mindful of that. You can ask tenants that are leaving why they're leaving and what the turnover costs are. So tenants will be very honest with you. Tenants will be very, very honest with you, and they'll let you know exactly why they're leaving. So you want to be very mindful of a property that has high vacancy rates, unless it's in a secondary or tertiary market. Red flag number 6. The numbers don't work without aggressive assumption. We do not assume aggressively. In fact, we look at every deal conservatively and think about the worst case scenario and what we would do in that case. So if you have to increase rents to an astronomical amount to see some good positive cash flow, then that's probably not a good deal. So if you have to say, okay, we'll raise rent 30% in year 1, That's a red flag. That's a red flag right there. And just take up your foot and run. Just take up your feet and run with them. Always underwrite conservatively. We always know our cash flow break even point before we buy any property. Red flag number 7, sketchy zone or permits. Illegal suites. It's in the name. You don't want to be illegal. You don't want to do anything illegal. You want to make sure everything is up to par. Unpermitted work or zoning violations that can delay or kill deals. You want to make sure you have a good look at that zoning permit to make sure that everything is compliant. So always check with the city and pull a permit report. So this is a bonus red flag, and it is if the deal feels too good to be true. No, not to be a pessimist, because there are times when it feels too good to be true and it turns out being true. So I'm not saying that 100% of the deals will be like this, but more often than not, if it's too good to be true, you want to cross your T's and dot your I's. If it's too good, then it probably is. So you, again, just double check all those steps and go through everything with a fine-tooth comb. The tip of the day is have an investor mindset, not an emotional one. Do not lead with your emotions when it comes to real estate. Real estate is a business. You treat it as a business, not an emotional roller coaster. So multifamily investing is one of the fastest way to build long-term wealth, but only if you do it right. These red flags are how we protect ourselves at Ellison Capital and our investors as well. These red flags are how I protect myself, also my investors, and my legacy. If this helped you, hit the like button. It helps more people find this information, and comment below if you want me to talk about any of these red flags or go in depth into any one of them. Also comment below if you've ever seen a red flag in a deal. I want to hear your stories. So if you're a busy professional looking to get started in multifamily the smart way, DM me, or better yet, reach out to me. I'll put my information here for you guys. I love to connect with you guys. I love to connect with like-minded investors or aspiring investors. We can talk. I can share my knowledge, my experience with you guys, and I am happy to connect. So until next time, I post videos every Sundays and Wednesdays. So I don't know if this will be posted on a Sunday or Wednesday, but I'll see you guys in a few days. And don't forget to like and subscribe, because it helps people to find the channel and find this information. My mission is I want to reach out to as many people as I humanly can to share this knowledge, to share the value of real estate investing. Real estate investing is something that can build you generational wealth for you and your family, and I just want to help those around me. I want to expand my community and help people see that as well. Thank you again. If you reach the end of this video, you are amazing, because I know I can be chatty sometimes, but thank you so much for watching, and see you in the next one. Bye.